Another very interesting category in e-commerce, which I think has really picked up in the last couple of years, is fashion or apparel brands, uh, which are selling on their own websites and on marketplaces like Myntra, Jabong.
Hey guys, Mohit here, founder at Blash.io. Today we'll be talking about an important topic about how to raise capital for our e-commerce founders, right? So today we have a special guest, Karan Mehra, founder from Tyke Invest, right? So do have a look on the entire podcast, and hopefully, this will be insightful in your investment raising journey. Thank you. Hey guys, very good afternoon. Today we are in another exciting episode of Flash E-commerce Growth Academy. Today I have a special guest, Karan. Karan heads Tyke Invest, helping brands to raise capital. Right, heartily welcome Karan on the podcast show.
Thank you. Thanks, Mo, for having me here. It's a pleasure. Looking forward to our conversation today.
Great. So yeah, Karan, let's kickstart with some bit of your background, some bit of your stories. How did you start? How did Tyke started? Right, it would be good pointer to start.
Oh, definitely. I'm originally from Mumbai. I've completed my education in Mumbai. I've also pursued chartered accountancy in Mumbai, uh, and I've gathered my professional experience in Mumbai as well in Deloitte. So have been a Mumbai or a Bombay boy pretty much all my life. Very recently, because of Tyke, we've uh, moved now to Gurgaon to set up a bigger team. But yeah, I think for me, I started Tyke around 2 years back, and the thought process of starting Tyke was around the opportunity that we saw of how India as an economy is completely dependent on MSMEs and startups, as we famously call them. How this market is growing uh, rampantly in the last decade. And if you look at India, if you look at US and China, uh, their economy has also been built on the bedrock of MSMEs. So looking at that trend, we realize that the biggest problem in the MSME ecosystem or the startup ecosystem is that it's very difficult to access capital. It's very difficult to work with NBFCs and banks to get capital. And more importantly, you don't know what type of capital suits you best in the journey that you currently are. So the idea was, how do we solve for founders' capital requirements across different types of instruments, incentive plans, community offerings that we could build. Uh, and at the other side, we realized that the biggest problem is that there are a lot of individuals today who do not have access to invest in these opportunities because these are considered to be structured opportunities restricted only for the top 1%, primarily because of lack of distribution and lack of awareness of such products. So we thought, why not build or why not uh, accumulate these two problem statements together and build a marketplace solution where one solves the other. Uh, Hence, we built an investment app called Tyke, which allows retail individuals or now also businesses to invest or back young MSMEs and startups which are currently in the journey of growing and then eventually becoming public companies. Uh, and we're doing this by building very interesting investment products which provide a return which is much higher than what any other alternative type of financing would be able to achieve.
Okay. So, you have been observing, at least the last 2 years, and before that also you would have studied, right? So how probably, we'll talk about the e-commerce, taking one of the segments, right? How e-commerce have evolved when it compares to, raising capital. What used to be, 5 years back, right? When we have seen, tons of investments and, in major brands, and now what it is currently, right? What's your thought here, Karan?
So I think one of the most important things in e-commerce is that e-commerce, I believe the ability of trying new products has really increased on the consumer side. I think consumers are looking at trying new products, hence allowing you the ability of uh, having your product being bought for the first time at a much higher level. So I believe e-commerce has the acceptance of e-commerce in a new purchase has increased drastically. I
Mm-hmm.
still feel that most brands struggle with retention
Mm-hmm.
in this particular space because they're not being able to sell those products again. Uh, Additionally, another problem which I see these brands face is that because of lack of capital, uh, they're not being able to compete with the prices that are being offered on the marketplaces. Hence, everyone's preferring to buy from an Amazon, Blinkit, Flipkart, as compared to their own original websites. So what I've seen is I think saying 5 years earlier and today is different. I think the market's 2 years earlier and today is also very, very different. I think 2 years back, uh, 2 years back, the amount of D2C sales that used to happen were quite high. But I believe now with the so-called funding winter, with access to less capital, uh, brands need to start accommodating how debt or structured debt or working capital financing can really sit into their types or sit into their financing requirements in order to be able to compete with the prices that uh, Blinkit, Amazon, or a Flipkart has to offer. So I believe uh, 2 years back, a founder's mindset in e-commerce was to raise as much equity capital as possible. But I think today, founders are now open to the idea of raising some type of working capital financing. Uh, and I believe today what's happening is because capital is scarce, everyone is trying to build a negative or a net working capital cycle.
Mm-hmm.
Uh, I think is something which is really, really good for most businesses today. Uh, because what happens is the moment you raise some type of debt capital, the obligation to pay back really makes you make the business much more streamlined, much more, I would say, self-sustaining, as compared to equity capital. So I feel uh, brands are making much smarter choices today. They're spending money on marketing very, very prudently. And at the same time, they're looking at financing, which reduces their working capital cycles as fast as they can. So I feel this is the right change that the country needed. I think 2 years back, everybody thought that they could build an e-commerce brand uh, because of the vast inflow of capital that was happening. But I believe now it's become much more difficult. Now everyone knows that raising structured debt will be the way to go forward, be the way to grow, and the brands are endorsing it. So the ones who really win that race of being able to really profit through structured debt are the ones which I feel are going to really become big brands in the future.
Correct. So you talked about, working capital, right? Like, this is also one of the term coined in the investment era, right? So so we talked about, debt based. What are the key options, some of the options which is available for the brands if they want to, raise and help to, raise focused only on this working capital so that, their operations are streamlined.
So, so typically, the problem that most MSMEs or most startups face is that uh, more generally there's always selling to a party which is bigger than them in size, and which
Mm-hmm.
basically has the commanding power when it comes to negotiating a contract, right? And most big brands, uh, you could name all your marketplaces today. You could name huge brands like a Reckitt or like an ITC, like a Hindustan Unilever. They love running their businesses on negative working capital cycles. Now, what that means is that uh, the places where you're selling, you take you receive advance payment. However, the places you are buying from, you pay after 60 days.
Mm-hmm.
So what that does is that allows the brands or these bigger brands to always stay cash rich. And churning that cash or rotating that cash is where the real profits come from,
Okay.
right? now the problem is that smaller brands or MSMEs are trying very hard to reach that level of volume or reach that level of number or reach that number of sales to be able to command such terms, right? To give you perspective, a Hindustan Unilever for me as an e-commerce brand uh, could be 20% of my sales, but I would only be maybe 0.1% of his sales, right? So for it's difficult for me to command a working capital cycle as per my uh, uh, requirements. So what that does is that now the same problem is also faced by the person who is selling now to the bigger brand, where he will receive the payment for the goods sold after 60 days. However, the same brand is telling the same client is telling you that I need XYZ more products for the next month cycle. So the problem that these brands face is that they've not received the money for sales. So how do they reinvest that money in their COGS and be able to build products to supply to basically honor the next PO,
Okay.
right? So is where working capital financing comes in as a solution to this problem statement. The solution is that what the solution is that companies like Tyke, uh, NBFCs, and even banks uh, provide you with a line of capital against the POs or the invoices that have already been accepted or have already been delivered to you, where the money has to be received by you after 60, 90, 120 days. So what brands like us do is we say that, hey, you know what? We will give the money to you. And when we say we, it's basically Tyke's retail investor network, which basically participates in these invoice discounting or PO discounting campaigns by putting in capital. Uh, what they do after that is that they are able to they're able to get their price or their sales money upfront by paying certain discount or a commission fees on that particular payment.
So yeah, so continuing it further a little, right? So now we talked about operational capital, right? Working capital. How about if we go for a traditional equity based funding, right? So how does a brand owner or a founder know what are the things which he or some prerequisite checkboxes that I am investment ready, right? What are the key things which investors will look, right, before they will say that, hey, this looks interesting?
I think for equity, what investors are looking for is typically uh, if founders come from a track record of understanding supply chain, uh, having the ability to market the product, and having the ability of building products which are category creating, uh, or better in quality or better in price. So there's always one distinction that every investor is looking for, which is an inherent quality of the founder. It could be building a great product at a premium price, building a good product at a cheaper price, or creating a new category, right? So these are the three things that any investor will look at when it comes to an e-commerce brand. Second thing they will look at is the ability to really market the product very, very well, and the ability to run a very asset light company.
Okay.
If you're someone who wants to get into manufacturing and you only are selling, let's say, 10,000 units a month, that might not make too much sense for an investor to invest into such a capex heavy company.
Okay.
So these are the things that an investor is looking for at a fundamental level. Then obviously they'd want to see the growth in the company, how the company has been growing. Typically a 10% month over month is considered to be very, very good
Okay.
numbers of growth. Uh, Nowadays, which is something which a new metric which has come in is uh, does the company have the ability of running a very strong business fundamentally without having to give very high amounts of discounts to run the company?
Okay.
I think that's something which is very, very interesting. It's a new consideration that investors are looking at. Uh, another thing investors are looking at is what is the operational cycle of a business? Meaning, at what scale do my fixed costs remain the same? They don't increase over time. I think that's very important for any e-commerce business to look at. Uh, and how soon can we reach that scale?
Okay.
Uh, these are the questions that an investor may have for an e-commerce business. Uh, I'm still of the opinion that an e-commerce business is such where necessarily raising a lot of equity capital may not be the best way to run it, especially in the initial days. I think an e-commerce business is someone which should look at raising capital only in that Series A and above period. I don't think they should raise money before they're at least at a 10 to 15 crore rupees ARR.
Okay.
Uh, because uh, it's very easy to raise equity money, uh, give give products at a very significant discount, and have a perception that that the company or the product is working. But the moment you cut out these discounts because you're short on equity capital, is when the real test, I believe, is of your product. Where someone will someone buy your product if it's 20% more expensive, I think will become the real test for you to look at.
Okay. So one of the fundamental question which I hear from when I speak to investors. So is raising capital is must for me to create a brand in India? Right. What is your thought?
I don't think so. I don't think so.
Okay.
I believe I believe I believe raising capital is very important for a business only if supply chain financing is not helping them.
Mm-hmm.
Uh, they need to invest very heavily in a lot of capex, which is the fundamental requirement. Or if the product is a complete marketing play, where the differentiation is the ability in which it reaches the customers. So I feel if you're someone who's building a value creating product uh, with really strong unit economics, uh, I feel with just supply chain financing until you reach a 10 to 15 crore rupees revenue for the year is the right way to look at it, and then look at raising more capital.
So how about now if I have to take say top three categories on which investors are taking bet these days, right? What is your thought? What are the feedbacks are you hearing?
I think right now the top three categories people are looking at. The first one would be anyone who's selling uh, products in the lifestyle or healthy space. I
Mhm.
think FMCG products in the lifestyle or healthy space are doing very well. Uh, Another very interesting category in e-commerce, which I think has really picked up in the last couple of years, is fashion or apparel brands, uh, which are selling on their own websites and on marketplaces like Myntra, Jabong.
Mhm.
Uh, the third category I would say are beauty and wellness. I think beauty and wellness, uh, which is skincare, uh, healthcare, skincare, hair care products are doing very well. So I think these three categories are categories which I would say look very bullish to me, at least for the next 2 years, and have the ability of creating world class brands in India.
Okay, let's take a minute, probably, deep dive a little bit on, Tyke's ecosystem, Karan. Like, if you have to pass on certain very specific to-do guidelines that, hey, how they can leverage Tyke as a partner in terms of their growth, right? Right. What is your thought if you want to pass on some key points?
So I think Tyke today is by far the one of the industry leaders when it comes to supply chain financing for e-commerce brands. Um, uh, I think what we do very well is we work with the founders. Although we are a tech company, our DNA lies in being a CFO, being a financial structuring expert who basically works with the founder, works with the business in understanding what is the capital requirement that they have, why do they need the money, what would be the cheapest way of getting that money, and you know what, let us get that money for you. So for us, we look at ourselves as the capital life cycle management partner for e-commerce brands as we grow. We already work with more than 100 e-commerce brands. To name a few, we work with Zoff, we work with Dealberg, we work with Whatcraft, we work with some amazing e-commerce brands in India who are already leveraging working capital financing from us across invoices, POs, LOIs, uh, across different types of clients that they work with. I think Tyke also, because of the scale that we've reached with respect to the number of investors and number of companies we work with, our fulfillment period is always not more than 48 hours since we onboard you on the platform with respect to supply chain financing. So I believe access to quick, fast, and right type of financing would be our moat. And any e-commerce brand looking to leverage and increase the number of cycles that they can churn in a year uh, can genuinely benefit from Tyke or any other company in this space uh, at a very frugal cost.
I think very insightful, Karan. I think very enriching information back to the community. Right? Probably we have reached the end. One of my favorite sections. So quick two three insights about Karan as a person. So what's your mantra for growth in today's world, Karan? Like be it brand, be it, raising Tyke to the next level. What's your thought?
So I think for us, we've always been someone who feel that building differentiated products which are category creators or which are solving a need which is not being solved earlier uh, is the right way to grow. And then you can obviously amplify that with more marketing, building a brand, telling a story. But I still feel that for us, as a company and myself as a founder, I'm very product focused, and we're very focused on delivering a good product, getting the best deals. Uh, we still get most of our business from word of mouth marketing. Uh, so I feel that for us, the mantra to grow will be to continue leveraging our strength of building products which aren't available otherwise, solving that real problem, and at the same time, helping businesses get access to capital as per their requirement of why they need the money and for how long do they need the money. I
Okay.
think if you're able to make that happy marriage work, uh, things will look good for us in the future.
Any business leader which Karan follows?
A business which I follow, uh, I think of late I've really started studying uh, the Zerodha ecosystem. I believe their move in the mutual fund space, their personal investments in some of the regulated entities that they work with, uh, their representations on policy making, their own fund of supporting supplementing businesses, I think is very smart. That's one. Second, I feel I'm also very interested in understanding uh, how uh, maybe an Adani and an Ambani these days have been operating almost like a private equity fund, right? Uh, where they have a couple of businesses which are the cash cows, and they reinvest that money into multiple smaller ventures and then grow that, right? So I think businesses in India need to start looking at a private equity or a divestment mindset. I think from day zero, uh, which means that you need to reinvest your earnings into similar or I would say supplementing fields
Supplementing
and
fields.
build and build businesses around that, right? So I think that is currently what my mindset is. I think we're also working very hard in figuring out ways in which we can leverage our current supply chain of users and businesses and build new verticals around that.
Okay, very neatly put, Karan. I think it was very insightful. I truly appreciate your time. Thankful from the entire Flash team, right? Taking some time out today.
Thank you so much. Thanks, Mohit. Thank you.
Thank you, Karan.